All right. So, good morning, everyone. For those of you who don't know me, I am Kimber. I am a business development agent with the FBI Group. And this morning, we are lucky enough to have Brian Adams, who is branch manager of Edge Home Finance. And he's going to get into a little bit about different types of programs that are happening right now, the rates that we're seeing. And Brian, can you tell me a little bit about yourself? How long have you been in the industry now at this point?
Yeah, thank you. And good morning, Kimber. So it's been coming up on 5 years. I'm born and raised in St. Petersburg, but I'm with a national company, one of the largest brokers in the country. So we do kind of have that local thing with the national resources, which a lot of my clients like to take advantage of.
Definitely. And we all know, being in the St. Pete, Pinellas area, we love working with locals. It's definitely one big family in that area.
But yeah,
So
realtors, borrowers, they seem to definitely prefer that.
definitely. And I can attest, I've used Brian for my own transactions, even my personal residence. And he is one of the most patient people that I have ever worked with. I asked so many questions my first time around, and he was always available and so patient with me, always answering every single question that I had. By the end of it, he was like, you could think about being a lender. So
You definitely are not the typical borrower. We call them borrowers, buyers, whatever you want to say. But you had a lot of great questions, and I think that that's a really wise thing to do, is have questions and understand, one of, if not for most cases, the largest transaction of your life to that point. So you did well. I'm glad I could answer those for you.
yes, definitely one of the best lenders to work with. So Brian, let's get into it. What is the first thing that we are going to cover today? We're going to talk about the crazy rates that we're seeing right now.
Yeah, so that's obviously like the big topic is rates. Everybody sees, whether it's advertisements, marketing, social media, the rates are historically low. That is a fact. And that's what everybody wants to know about. That's always the first question I get. And it's always the main topic when I have these types of discussions. It's the rates. So yes, that is absolutely true. Rates are historically low. We've been seeing that trend now since mostly since June. We went through a very weird time, obviously in the beginning of COVID and, during, when it started getting really difficult, for people in the country. So, but, I got to give credit to the powers that be. The reason rates are so low is they are designed to help people have some relief for their monthly payment, for their overall cost. And, there's just, cash outs are a topic that we can discuss too on refinances. Refinances, of course, are one of, if not the biggest thing right now. But the purchase market is, it's a great time. It's such a perfect storm for people, no matter which end. You're going to take advantage of the lowest rates in history that we've ever seen. The savings over time, whether it's right now monthly versus your current mortgage, or what you're going to walk into on your new home, it's never been seen. It's unprecedented. So it's a really cool time. It is not permanent. I'll discuss that here in a bit. But for some people, it will be for the foreseeable future. For others, it won't, because of a recent announcement. We can cover that a little bit more. You ready?
Okay. So yeah, that was actually going to be one of my questions, is when's the last time we've seen rates like this, if ever?
Basically never. Like for all intents and purposes, this is pretty much unprecedented. Rates, you'll notice, the trends for when really negative events happen to our economy specifically. Obviously, COVID has a lot more effects than just the economy, but you will notice a trend, back in the last big event that was like that everybody can remember, 2007, 2008, things like that time frame. Rates were also very low then for a similar purpose, to help the economy and individuals recover and save some money, really. But the difference this time is that the projection is that these will maintain and for the most part stabilize for 12 to 18 months. So that's a really exciting thing for us in mortgages, and obviously for people out there, looking to take advantage.
Definitely.
Save money.
Yes. Who doesn't love that? So you mentioned there's been a new announcement. Do you want to get into that a little bit? That has to do with
for sure. Cool. Absolutely. Yeah. So this is a huge topic. Not everybody, I'll get a little bit more savvy clients who will ask me this question straight away. So it's I want to touch on it, the right way. So Fannie Mae and Freddie Mac are names or entities that a lot of people will recognize, just they've heard it. Not everybody understands who they are, what they do. Yesterday, I had a client doing a refinance who asked me, well, when will the lenders, Fannie Mae and Freddie Mac, do this thing? So it is common that people will think that those are actual lenders, but in reality, they are the two main entities that govern mortgage guidelines. So they basically like tell us what we need to qualify people for a mortgage. They govern those rules, those guidelines. Again, I want to make sure I'm saying this, in the best way, but it's hard to avoid a negative connotation when I discuss it, because the announcement came about a month ago that Fannie and Freddie were going to impose a 0.5, a half a point hit on conventional refinances exclusively. It does not include FHA, VA. Those are the two other most common types of loan products. So there's conventional, FHA, and VA. The vast majority of borrowers are going to experience one of those products. And it was not and will not be imposed on purchases. So those of you out there who are concerned, will I experience that if I go to buy a house? No, you won't. It's not a purchase. It's called an adverse action. So it's not adversely affecting purchases or any type of transaction for FHA and VA refinance or purchase. But it is specifically for conventional refinances only, which include rate terms and cash outs. The rate term is just, I don't want to take money out of my home. I want the best rate and I want the best payment I can get. The cash out is just like it sounds. You want to take money out of your house, but the opportunity to be able to do that, that's such a popular option right now for so many people, because there's never been an opportunity to borrow, in most cases, a very large sum, right? Depending on your equity position, how much ownership you have in your home. There's never been an opportunity to borrow that dollar amount for this low of a fixed rate forever. What you take and use that money for can increase the value of what you're doing. So if you're using that money and then you're improving your home, if you're paying off debt, if you're investing, and a lot of people will just invest it, because if your rate is somewhere around 3%, even on a cash out, which is a higher rate than a rate term, but still, when people hear 3%, they go, well, I would say the majority of most people out there who have purchased in the recent, in recent memory, are well into the fours. I think the average is like 4.5, 4.375, something like that, but into the fours for sure. When you hear that number, that rate that you can get on the cash out, man, that's awesome. If you, let's just say you just invested it, like, I don't know if I want to take that much out. I had a person yesterday, a client, say, well, I don't need that much money. The payoffs I want to make or the improvements I want to make won't cost that much, but I can take and invest that, and the average return, if anybody is out there with investments, you probably really enjoyed seeing your most recent quarterly numbers. I think the average right now is close to 20%, in the last quarter that investments are up. That's not a number to count on, but I think it's pretty common knowledge that, an 8.5%, 9% is the common return over time for most investment accounts. A lot of financial planners and advisors will recommend averaging at 6.5% or something like that, more conservative. But either way, you're basically more than doubling the interest that you're paying on that money. So you'd make money on it. You use what you wanted for what you needed. You could save. It's just an opportunity to have that dollar amount for the lowest rate you're probably ever going to experience. So when it comes coming back to the adverse action, when they announced that, they said in 2 weeks this is going to happen. 2 weeks, 100%, another unprecedented event that's never occurred. Fannie Mae and Freddie Mac, and any kind of announcements that are going to affect a large majority or a large percentage of mortgages. It's not something that you just give a 2-week notice for, ever. It literally never happened. So as you can imagine, the reaction to that was pretty strong, mostly from the mortgage community, because that means that even if your loan was already in and locked, you're not paying for it because you've locked your rate. You can't unlock a rate. You can't make someone pay more after the terms have been set. But those lenders, we're going to have to pay that half a point on the back end to the secondary bond market. That's like the pillar of our economy. That's one of the main things. That's one of the reasons for all these improvements to the rates, things like that. One of the pillars of our economy is the secondary bond market, which is just like investment entities that purchase mortgages. That's probably the easiest way to explain that. But the only way to do that is to sell those loans. So I get a lot of clients that say, well, this particular lender is not going to sell my loan. That's because it's a retail transaction. As a broker, I'm giving the borrower an advantage of a wholesale transaction. So I'm going to get offered a wholesale rate as a broker. Because of our size, we very often get a better rate or a lower rate with incentives or something because our business is more desirable, right? And I'm taking the opportunity to shop that process to the entire country. So perhaps it might be a little bit inconvenient to people to I don't want to change servicers or whatever. That is one of the main reasons our economy is what it is in America, that secondary bond market. But at the same time, that retail transaction is starting almost always across the board a half a point higher. It's just you and a bank or a direct lender. So there's such an opportunity and an advantage to using a broker, no matter who that is, because of that process. So that was the reaction. And I will say whatever people want to say about the political process in this particular scenario, there was a movement and a call for action to our politicians, and both and the House and the Senate and all of our representatives, sent to everybody. Within a couple of weeks, they actually did something. They went to Fannie Mae and Freddie Mac and said, you can't do this. This isn't fair. Because then so the lenders or the people are, well, I don't really care if those lenders lose a little bit of money. I got my rate fixed. That's great for me. That's true. But and those lenders are massive companies and they do have, a lot more capital or whatever than the regular borrower. But if your rate wasn't locked or if you just started a loan, no loan is closing in 2 weeks, basically. It is possible. I've done it before, but it's not common. Especially for a refinance, they are absolutely slower than purchases at this time. That's just how they prioritize right now in the industry. So even if you just agreed yesterday, all right, I got this great rate, my lender's blocking my loan, whatever, or whatever the case may be, doesn't matter. Instantly, that 0.5 hit took place. So it was just such a negative effect on mostly people who are a little bit more interested or savvy. That's not to say FHA and VA borrowers aren't savvy and informed, but the data shows us that conventional borrowers are people with higher credit scores, with a little bit more understanding of the market and what they're trying to do, with their mortgage. And it was only exclusively affecting them. So that just straight, I guess that just wasn't fair. I can't think of another way to say it. And that was the majority of the reaction. But I got to give really credit to our politicians across the country that this wasn't a state or a local thing. This was a nationwide effect that was going to take place. So that was actually delayed till December 31st.
Okay.
So this is the big thing right now. So that doesn't mean that you can have your loan and wait a couple of months and close it on December 30th or 31st and you're fine, because there's time. There's a process to a loan closing, to a loan funding, to a loan being available on the secondary bond market, and that transaction completing its full cycle. So that's not necessarily true. That December 31st is not the exact number. And some lenders out there have already imposed the adverse action again. They're saying, hey, we're moving forward. Any locked loans, by this week or tomorrow or yesterday, some of them, the 0.5 hit is in effect right now. So we've already lost some window for conventional people out there with conventional mortgages. That window has closed in some way. But as a broker, again, I'm not locked in, or any broker is not locked into shoot. That's what we can do. Our executives have made a decision, and that 0.5 hit is in effect. That's not the case because we as brokers can go to the whole country. There are still many, many lenders out there, phenomenal lenders, the biggest lenders in the country with the best rates that are going to be able to put that off for one projection is at least the end of this month. That I've had some conversations with individuals with these different lenders, and that is something that has been most likely said or most likely going to take place. We're not going to have most lenders and the best ones, really the biggest ones, we're not going to make conventional refinances take on that half a point hit at least until the end of the month. Hopefully even later, because of how quick they are to close versus other lenders. So, that's what's happened. I know that was a lengthy explanation, but I want to give as much information as I can on the topic. It's a big topic right now. There is still time, but the conventional refinance window is closing for these rates now. One more thing I want to say on the topic is that doesn't mean that if you wait or you don't make it in, that you're not going to get a phenomenal rate comparatively to the rest of history. You absolutely are. Half a point is not the end of the world. But this is an opportunity to take advantage of what rates are now before that takes place. If you are a conventional borrower with a conventional mortgage now to refinance, or whether it's a refinance or whether it's a rate term or a cash out.
Because this is specifically for, to reiterate, it's for the conventional refinances. Does not have to do with when you're purchasing. This is specifically for refinance with conventional.
Absolutely. That's exactly correct. Yep. Refinances, no matter what kind of refinance, rate term or cash out, whether you just want to get the lowest rate and the lowest payment, or you want to take some money out while also lowering your rate. I mean, in almost every scenario that I've quoted borrowers or gone forward with clients on a cash out, they're lowering their monthly payment. So last night, someone who chose to move forward, they're going to take out about $50,000 out of their home, and they're lowering their monthly payment by $150 because of the rates. It's just there's such a great and incredible opportunity at this time to take advantage of something that is truly special. It's a special time, but unfortunately for some borrowers, and a lot of them, the conventional market is a large one. It is closing for these rates today, but I still want to stress that that doesn't mean that when that half a point goes into effect, you're still not going to incredibly improve your current situation, most likely just because of where we are in history compared to what the average rate is for most people in that category.
Yeah, because you're seeing on average, is it accurate to say you're seeing between like a 1 point to 1.5 point, maybe 2 point decrease with some of these old interest rates versus the refinance rates?
Well, let me just give an example. So, I have to say that every loan is created not equally. Okay, that's what I say. So every single loan is completely different. I mean, not in every way imaginable, but in some ways. So this part, I'll just use an example as this is the most recent file that I'm moving forward with. It's this type of transaction that we're kind of discussing. So in this particular scenario, the borrower is lowering their rate 2.25 points.
Okay.
So wow. That's just that is maybe that is probably like on the higher end of what people can expect to save. But if you have a rate out there that's near 5% or a little over 5%, which was absolutely common 2 years ago,
right?
That was a normal rate. 5 1/8, 5.125. That was common. If you wanted to put a very low payment, very low down payment, if you wanted to save money, there's so many reasons. Again, all loans are created not equally. I have to really stress that. So I don't want everybody to call me or whatever, or whoever their person that they work with to say, I want to save 2 percentage points on my loan. But it's certainly possible. And it is the case more than that on this particular scenario, because it was a couple of years ago. Rates were around the 5%. That is what their rate was, about right about 5%. And they're going to be under 3% on their rate, and they're going to save money and get money back. And they're going to use that money for more value. So that's like one thing that I can't stress enough. Like, it's an opportunity. I'll give an example of another scenario, a similar one, a cash out refinance for a conventional loan. They took that money out. They lowered their payment. I think that one was closer to 100. But the money that they used, the money that they received, they used for payoffs on their credit.
Okay.
The net savings after those payoffs were completed with money left over was over $1,000 a month.
Wow.
So it's like you've borrowed money at an incredibly low fixed rate, and you've used that money to vastly improve. I mean, we all know monthly expenses are our lives. That's what really it comes down to at the end of the day, is your monthly income, your monthly expenses. So even though their mortgage increased, the payment still was lower because the rate was so much lower, and they used that money in a very wise way to make payoffs on their credit, that after it was all said and done, they saved over $1,000 a month and had money left over from their cash out. So there's such valuable ways to use that money that you're getting. And when you go to pay it back, you're paying yourself back. Yeah. So it's like you're making your mortgage payment. Of course, not all your mortgage payment goes to principal. We all understand that, but certainly a portion does. So there is a portion of when you're making that payment back on that new money that you got it at the lowest rate, that we've ever seen or potentially have ever seen, that you use to improve your monthly situation or make home improvements, which increase your home value. Like, there's just so many ways that it can benefit you. Like, in addition to all that, when you go to make the payment, you're actually putting some of that money back into the home over time. So there's more money back to you that you're reinvesting from the money that you used. So the benefits just, if you, it's a conversation you want to have with your mortgage person. So if anybody wanted to talk to me, I would go over these options, this information. But there are just such valuable ways to use the money for a lot of people. You end up, the savings, the improvements to your home, the increase in your property value, the increase in your equity position, your ownership of the home, all of those things can be potential benefits, while skipping at least the mortgage payment, by the way, sometimes too, and getting your escrow balance back, which is usually in the thousands. So there's right now savings for people with the skipping the payments and getting the escrow balance back. And then there's all the long-term things that I just discussed.
Yes. So now's a great time is kind of what it comes down to from what it sounds like, at least like to have that conversation.
It's not an opinion. It's a fact. I mean, there's just data, it is a special time and it's a really, really rare opportunity. I know it's rare in history. I'm not saying it's never going to happen again. I'm not, there's no way to predict that, but we know where we are now. We know what rates have been in history. It is a special time to take advantage of the opportunity.
And Brian's information is scrolling across the screen. So if you guys would like to write his number down, it comes across every like 5 to 10 seconds. So that is his number. If you want to go ahead and give him a call, shoot him a text, ask him any questions. Like he said, he's willing to talk to you about all of these things. And like I said, I asked him so many questions. There is no dumb question, and he will get back to you. He's so knowledgeable, as you can tell.
It's just information. I mean, it's just information. At the end of the day, there's no reason to push someone one way or the other. You just want to present accurate information and let the borrower or the client make an informed decision. Exactly. But at the end of the day, in my opinion, there's absolutely nothing to think about when it comes to just exploring the option, getting the information. I don't charge for my applications. I pay for the credit reports myself out of pocket. Like there's zero cost to it and, out of pocket, and it's just information. So that's what I always stress to my clients is you just want to get informed. Let's stop guessing. Let's get the information in that we need. Let me do the math. Let me present you with as many options as you want. I had someone a couple of days ago, they wanted 10, 15, 20, 25, and 30-year options. They wanted rate, term, and cash out options at those different terms. They wanted to understand, the closing cost differences at each, escrows and waiving escrows. That's not a topic I would expect everyone to know, but there's just so many ways it could go. And I'm very happy to present that information in a concise way in writing so that they can make an informed decision. At the end of the day, that's what I encourage people to do. Just get the information that you need to make an informed decision on something that could potentially change your life in a financial way significantly.
Definitely. And we all know, unfortunately, money makes the world go round in a lot of ways.
You're gonna pay it anyway. At the end of the day, you're gonna continue to pay your mortgage. So if there's an opportunity to save money and then maybe get money to use something that's going to further benefit you, there's just nothing to think about, just getting the information.
Yeah. So are we seeing a trend then, talking about those FHA loans, are we seeing a lot of first-time home buyers taking advantage of these rates at this point? Are you seeing kind of an influx of that?
Oh yeah. So a lot of people are buying. So I hear some people say, new buyers, well, the market is inflated. I don't want to pay top dollar for a home. I'd rather get a good deal. That's not necessarily accurate because the good deals are usually around a time and have historically been around a time that the rates were significantly higher. Right. So when you do the math, again, it's just math. If you know how to do it and you present the information, accurately, the math shows us that because of how much lower the rate is and how much less interest people are paying, over time, they actually save money on the home. Because if you buy a house for a lower number but have a higher rate, that interest adds up. If you buy a house for a higher number, depending on what the higher number is, of course, if you're paying, there is no scenario that I've seen that people are paying hundreds of, it would have to be a massive overpayment number. That's not the case. We're paying true market value based on sales. Yeah. That's what sales prices are based off of. So if you do the math, maybe you are paying more for the home, but now you have the opportunity to take advantage of such a low rate. Over time, the interest more than makes up that difference, and sometimes very significantly more makes up the interest. You end up saving money because the rate is what always comes back to right now. Yeah. The savings from the rate over time. So it's actually a kind of win-win for everybody. If there are people out there who are homeowners that are considering selling and buying, you're going to have the best of both worlds. You're going to sell your home for a really good price. And then you're going to be able to use that if you potentially want to purchase a new home with the proceeds. Yes, you will maybe not pay like a below market value. I don't know why people would expect to pay a low market value. Market value is what it is. But even if we calm down a little bit, rates are projected to increase over time. We are there at the bottom now by most projections. So so now you just sold your home for top dollar, and you moved into the new home with the lowest rate you've ever been able to take advantage of previous to this. So it's kind of best of both worlds for a lot of people selling and then buying.
Yeah. Agreed. And with I know you mentioned a new down payment assistance program. Is that something you want to talk a little bit about?
Yeah, so it's not super new. Oh, and just to go back real quick to what you mentioned on the FHA, I heard you connect FHA with first-time home buyers. That's a really common misconception. I'm not sure if you were doing that on not or just saying the two things separately, but just because that brings something to mind for me, I want to clarify to people who are listening. FHA is not for first-time home buyers. It's not. It's not a first-time home buyer program. Literally anyone can do it. It's just for primary residences. That's it. FHA is designed for people with less than stellar credit. There are a lot of other things to it. I certainly don't want to put it in, I don't want to put a pin in it like it's only this thing. For the majority of people, that is who take advantage of it. If you don't have a 750 plus or well over 700 credit score, it's not always advantageous to consider a conventional loan because the rate, mortgage insurance, if you're not putting 20% down, which is not common, especially for first-time home buyers, right, it is higher. So I purchased my first home FHA. I didn't have incredibly stellar credit at the time, but it's a government sponsored program and partially government insured. So the rates are, they're phenomenal, absolutely phenomenal. So people will go, well, I don't like the mortgage insurance. I don't, this or that. You just put the two things next to each other. If that rate is like, I'm being 100% serious. There are FHA rates with borrowers in the mid 600 credit scores, really close to 2.5% or at 2.5%. So yes, there's mortgage insurance, but you don't have to put as much down. For a lot of people, it's 3.5%. And the payment, if the rate is significantly lower than what it would have been with a conventional rate, because you don't have a stellar score, payment will very often be lower. Less money times any amount of time is less money than more money times any, so at the end of the day, it's less. The payment is lower. So, that is what FHA is designed for. So I'm going to segue into go ahead. Do you have another question on that?
Can't you have mortgage insurance on conventional loans as well?
Well, for sure. And you're going to have it if you don't put 20% down, for sure.
Just want to verify that.
But so I'll talk about two things now, talking about down payment assistance and something that's a little similar with a conventional loan. Okay. So the down payment assistance program that I offer is not offered by all lenders. We are authorized to offer it it's a government sponsored program. Okay. Basically, at the end of the day, that particular program, I'll move into the conventional to answer your question about the mortgage insurance. That program are for people who have some money. There are a lot of programs out there that are advertised that are sponsored by municipalities, cities, counties, states that are down payment assistance programs. That's the way that they're presented. In my opinion, based on my experience, okay, I don't want to say anything in an absolute, right? But based on my experience with those programs, I get, a lot of people ask me questions about those. You'll get like 7,500, 10,000, 15 that it feels like free money. It's a second loan. It's a zero interest second loan. So it's called a silent second. In those scenarios, that's equity in your home that you don't own. So you got money and you didn't have to pay, maybe you didn't have to pay money out of pocket and it feels great. But now if you got 10,000, you own $10,000 less in your home. There are some that say, well, after a certain amount of time, you don't have to pay it back. I have refinanced personally those types of mortgages that did their purchase in that way, and they had to pay every single dollar back. And now that they lost 10 grand, so they thought they were getting 20 grand, or even if they were selling their house, they were thinking 30 grand. They got 20. They thought they were getting 20. They got 10. So it's not something that I recommend. In my opinion, if you don't have any money at all, it's not time to buy a house. Some people don't like that. That's what I truly believe. You need to have a little bit of skin in the game, I guess, as they say. But so FHA does offer an alternative, which is a product that I am authorized to do for my clients, which is down payment assistance. You got to have a little something. Most commonly, it's about 1.5%.
Okay.
So, if people got they can't put the whole down payment, all the closing costs, 1.5% to purchase a new home to get into the home. The other 2% is coming from me, from the lender, from the government. It's money that you keep. It is a gift. That's like what I can't, that's the difference. I can't stress that enough, how important that is. Because now instead of a silent second or a second loan that is not yours, that is ownership in your home that you don't have, that you've lost in equity, the money that you're getting in the down payment assistance program is yours. It is a gift. You keep it when you close on the home. That dollar amount is equity in your home that you own, right? So if you choose to refinance down the line or whatever, there is no paying anything back. There is no lost equity. That money that you got is yours, and you have the you have the equity that you need to refinance if you choose to later. You try to do that another way with the other program. There are time frames and things, but it's it's multiple years. But that again, I've refinanced those types of programs where they absolutely had to pay it back, and it was after the time frame that was, that was presented to them that they didn't have to pay. In this scenario, in that scenario, you can't refinance. You don't have the equity. You
Right.
don't own that part of your home. In this particular program, you got to have a little something, and I believe that you should. I truly do. If you don't have any money, it's not time to buy a house. That's what I believe. That's how I feel. But this program will let you really get in at a very minimum out-of-pocket expense, and the money you get, instead of having to pay it back or it being a second loan or it being money that's not yours, is 100% yours from the first day. So that having that extra equity just gives so many more options and opportunities to move forward, with a refinance or with really anything, a sale, because now you get that money when you sell it or refinance versus not. So that's the down payment assistance program. It's FHA, again, just to summarize. And for most cases, about 1.5% out of pocket.
Okay. So do you see a lot of people utilizing that? Like, is it cheap?
Absolutely.
Okay.
For sure. Yeah. Very common with first time home buyers. So there's another reason why I think a lot of people put FHA and first time home buyer programs together. It's not. Anybody can do it. This particular program, though, is mostly designed for first time home buyers, but it's not limited to that. There are also special occupations that can take advantage of it. A lot of like the hero type occupations, the law enforcement, fire department, healthcare, like things like that. They can do it, even if they're not a first time home buyer. And also people who just make under a certain amount.
Okay.
And mostly that amount is around $55,000 a year. If you make less than that, whether you're a first time home buyer or not, you can also take advantage. So it's really open to a wide variety of individuals, and its purpose is to help people get into a home, not spend the money out of pocket today, and keep the equity that's being given to them instead of losing it.
Makes sense. Awesome.
But yeah, to answer your question, super popular. I have, I think, 2 of those under contract right now, with 2 other offers out, with that same program. It's a really popular program for sure.
So my next question would be, why would everyone not utilize this? Like, why is there certain
Yeah,
guys?
the rate's higher, straight up. The rate is higher. I mean, you're getting free money. So what I tell my clients is, it's a means to an end. It's a means to an end. There is no free money. It doesn't exist.
Right.
When there are people that I've seen take advantage of, like credit union down payment assistance programs, where there's no money out of pocket, there's no mortgage insurance, it's in the rate. It's always somewhere.
Yeah.
It's in the rate. So in this particular program, I'm not controlling that. There is no lender that offers this program, and it's, again, not everybody. Not everybody can do it. It's not controlled. It is set, but it is a fixed government rate. So it is what it is. But that's why I explain to my clients it's a means to an end. The rate is certainly lower than most of those other programs that I've mentioned that you do lose equity. Sorry, I lost my train of thought. Though the rate is higher, the means to an end is you become an owner of a home instead of renting. You are gaining equity. You have ownership. You are making money instead of spending money. At the end of the day, that's what home ownership is. You're going to pay to live. Almost everyone is paying to live.
Yeah.
It's either an expense or it's an investment. Period. You're either making money or you're losing money. That's period. I mean, that's truly the fact of it. So if you do, so people who take advantage of it, this was an opportunity for them to become a homeowner. This was an opportunity for them to stop spending money as an expense in rent, start making money as an investment with a mortgage. And the end, so that's the means. Get into a home, but they just didn't have the out-of-pocket, they
Right.
didn't have the assets at the time, the liquid assets, to make it work with something more standard or conventional. Um, so that's the means to become a homeowner, to minimize your out-of-pocket expense, to start making money instead of spending money. The end is the equity is yours from the first day. So if you do choose to refinance, because the rate is certainly higher versus the standard market rate, but that's the trade-off. It got you into the house. So over a certain period of time, if you choose then that you want to refinance, at that point, the out-of-pocket expense is basically completely omitted, because you can roll all of your closing costs on all refinances, conventional, FHA, no matter what, from all the standard ones. They're streamlined things that you might pay out of pocket or whatever. Before the majority of refinances, you can put all the closing costs into the loan. So at that point, because you kept the money that was given to you instead of it being a loan, you can just refinance. You'll basically only pay for the appraisal. That's it. And that's hundreds. It's like $500 for FHA, and now you have taken advantage of the current market rate. And there was no other way to get yourself into that position other than utilizing that program. So that's the majority of people who use it. It's a means to an end for them. They just want to become a homeowner, but they don't have the assets required to use or to make the full down payment and pay all the closing costs and things like that.
Makes sense. Yep. And a lot of times, especially in today's market, we're seeing, your rent prices are typically much higher than what your monthly mortgage
No
ends
doubt
up.
about it.
And it's your
Absolutely.
equity. You're paying yourself. You're not paying that landlord anymore.
I do math for people sometimes that are coming out of a renting situation. If you just use a real round number like 2,000, right? That's $24,000 a year. So if your rent never increased, which anybody who's out there renting or who has ever rented is never going to happen ever. Like, rent goes up, it just does over time. Let's just say it didn't, though. Let's be really conservative so that I can illustrate my point. That's $24,000 a year. That's gone forever. You don't even get. It doesn't even improve your credit. That was like a real stickler for me when I bought my first home. Like, I'm spending, this is by far the biggest expensive that I have each month, and I'm not making any money. It's gone forever, every single penny. I'll never see it again. It doesn't even build your credit.
Yeah.
It's crazy if you think about it. Not everyone can qualify for a home, and that's the reality, right? But if you're paying that and you have a regular job with a decent credit score, nothing crazy. A lot of people have an idea in their head that you have to have this great credit score, you have to have all this money. That is absolutely not the case. The program I just described, first-time homebuyer programs for conventional loans, you can do 3% down. That's less than the FHA minimum, which is 3.5%. So, there are so many ways. There are so many loan products, and as a broker, I can offer them all. So direct lenders or retail lenders or banks or whatever, they're going to offer what they offer, and that's it.
Right.
Take it or leave it. Brokers can use all products available in the entire market because we're going to go to wholesale lenders that are exclusively doing mortgages only. So they're better at it. They're faster at it. They're more efficient. Their rates are lower. There's so many benefits. But, at the end of the day, it's some people can afford right now. Some people can't. But if you have a regular job with a regular credit and nothing special, there are programs designed for you. FHA, VA, they're very low credit score requirements. Right now, 620 credit score will get you a good rate on VA and FHA, and there are programs that allow you to go even lower. So there is that stigma of you have to be in a certain place, and it's just not true. You need to just call a loan officer, give them your information, and see where you stand. It's just, again, like I said before, when people are refinancing, it's just information, and it can potentially change your life over time. So going back over to that math, the rent, in 10 years, that's basically $250,000 gone forever. You're never going to see it again that you've just spent. And then if you do the math compared to owning during that time instead, it's just the number it grows even, it goes on both sides.
Oh, yeah.
It's just in the hundreds and hundreds of thousands versus what you would have spent to what you made instead.
Investing in yourself. If you can do it, like you said, get the information, find out if you can, you might be surprised.
A lot of people are surprised. I get people in the service industry sometimes. Well, I don't claim all my tips. If you have a pretty good, solid job, now that we're coming back from COVID and all that, you don't have to make $1 million a year, or $50,000 a year, or $40,000 a year to get a mortgage. There are properties out there that are in a lot of that are basically everyone's price points, and there are programs out there for most people's situation. So it's just information. Why wouldn't you want to know if you can buy a house or not? And then decide if you feel like it's worth it or not after you get the information presented to you, which again with me is completely free. So
Yes.
it's worth the time.
Yes. So again, Brian's information is at the bottom of the screen. I can also provide his email in the comments if that's something he'd like to give out. And I think those are our big points. Did you have anything else that you kind of wanted to touch on today, Brian?
I mean, you asked all the right questions. I think we pretty much touched on everything. I mean, really to summarize, yes, it's true. What you've seen, rates are historically low. I mean, it's just almost like I can't think of another adjective. It's like weirdly low. Like it's crazy. I mean, comparatively.
Average of where those rates are right now.
Yeah. So it is incredibly common for most borrowers in most situations on purchases, with somewhat of a decent credit score, that's pretty much it, that can just do a standard product, the money, the down payment, they can just do the minimum down payment, 3 as a first time home buyer, 5 as a new conventional buyer, or if you make less than 55,000, it's 3 no matter what, or FHA 3.5. If you can do the standard product, you're likely going to be under 3%. That has been the vast majority of loans that I've seen recently. And that sentence has never been uttered, in most of mortgage history, except for the last few months, because of a result. It's a terrible thing that happened, to us. But what the powers that be, the government and the different bodies that govern mortgage guidelines, I give them all the credit in the world. They stepped in and they really made a special thing happen for people to do something that has almost never been something that was an opportunity before. So it is true what you're hearing. Rates are astonishingly low. It's a special time to touch on that adverse action from Fannie Mae and Freddie Mac. They're going to do it. There's nothing we can do. We did get it delayed, but if you have been considering a conventional refinance of any kind, a rate term or cash out, your window is closing to not have to experience that increase to your rate. But even if you do wait or whatever, aren't ready or don't want to right now, you're still going to experience something special comparatively to the rest of history. But if you want to see what it would be before it, that window is closing.
So now's the time. Jump on it.
For sure.
Thank you so much, Brian.
My pleasure. Thank you.
It was great seeing you today, and I hope everyone has a great rest of their week, and we will talk soon.
Thank you.
Bye.